Business valuations are an essential part of any company's financial strategy. Knowing the worth of your enterprise can help you make important decisions about its future and potential investments. Business valuation services are available to provide experienced guidance in determining the exact value of your organization, allowing for informed decision-making and accurate market analysis. These business valuation professional assessments use reliable methods and best practices that take into account current market conditions as well as historical data to accurately assess a business's worth today, tomorrow, or 5 years down the line. In this video we will explore what exactly business valuation services entail, how they determine the value of your company, why it may be beneficial to hire them over DIY approaches, and where you can find qualified business valuation professionals who offer these invaluable insights into assessing businesses' true worth. But first, hit that subscribe button for more helpful content like this. What is business valuation? It's an important step for any business owner, entrepreneur, investor, or potential buyer to take in order to assess their current and future financial situation by business valuation professionals. A professional business valuation can provide insight into how much your company is worth and help you make informed decisions about investments, mergers and acquisitions, financing options, taxes, estate planning, and more. Private equity firms also use professional business valuation services to determine the fair value of a business as part of their investment analysis and decision-making process. The overall goal is to determine what a reasonable price would be if someone were to purchase all rights associated with the business today. Benefits of business valuation. Having an accurate assessment of your business's value provides numerous benefits for owners/investors/buyers alike. For instance, it can help you understand whether now may be a good time to sell your company or if there are areas that need improvement before doing so. Business valuation is an important process for any business owner, investor or potential buyer to assess their current and future financial situation. Benefits include understanding the right time to sell, raising equity capital and making informed decisions related to succession planning strategies. It's essential to understand how much your business is worth so you can make informed decisions and get the best possible return on your investment. Unlocking the value of your business can be achieved through the use of industry standards and professional business valuation analysts. There are several methods used to calculate a business's value, including analyzing financial statements and records, assessing market conditions and trends, calculating intangible assets and goodwill, estimating future cash flows, and evaluating risk factors. Analyzing financial statements and records, this involves reviewing historical data such as income statements, balance sheets, cash flow statements, tax returns, etc., to gain insight into the company's performance over time. This information will help you determine if there have been any changes in profitability or debt levels that could affect the valuation of your business. Assessing market conditions and trends, you should also consider current market conditions when determining the value of your business. Analyze industry trends to see if there has been an increase or decrease in demand for products/services similar to yours. Look at competitors' prices as well as their sales figures over time to gauge where they stand relative to you in terms of pricing power and customer loyalty. Calculating intangible assets and goodwill. Intangible assets include things like intellectual property, patents, brand recognition, trademarks, and customer relationships, loyalty programs, which all add up to create additional value for a company beyond its tangible assets like inventory or equipment. Goodwill is another factor that can be taken into account when valuing a company. It reflects how much customers are willing to pay for something above its book value due to reputation or other non-tangible benefits associated with it. Estimating future cash flows. To accurately assess a company's worth today based on what it may earn tomorrow requires forecasting future cash flows from operations using sophisticated tools such as discounted cash flow analysis. By taking into account expected growth rates, inflation, taxes, and cost of capital, one can estimate what kind of returns investors might expect from investing in this particular venture over time. To read our full in-depth guide on this important topic, click the link in the description of this video. We hope this video helped you learn about business valuation and why it is so important. Don't forget to like this video and subscribe to the official Elite Automation channel for more helpful content.